Thanks, Aditya, for those kind and humble words. As always, you and your team have done a fantastic job. I did attend one or two sessions yesterday, and again, the kind of speakers and the audience that you get is phenomenal. And Edelweiss is proud to be associated with all the good stuff that you're bringing to the thought leadership in the financial sector and especially in alternatives. And we hope to continue that relationship for many years to come. And also for everyone joining in, it gives me a lot of pleasure to be talking about India. I definitely believe the super growth cycle that we have been talking about in the last, probably 12 to 18 months. I think, this decade is India's decade. And there are a lot of factors that are culminating, a lot of correlations that are happening, which probably I'll speak about a little bit to the 2003, 2008 golden era of profitability in corporate India, and why this decade is aligning to be very similar. So if you can just move on to the next slide. Very quickly, we all know central banks globally since the pandemic have pumped in $40 trillion. Most major economies have recovered the nominal output lost during the pandemic. The record fiscal and monetary stimuluses, the vaccinations, especially in India, given we are an emerging market, the kind of response the government did, and the supply that we have had, a lot of developed market economies and governments and countries don't have. So the reopening of India, the pent-up demand, aided the rebound and growth, not only in some of the larger developed markets, but also in India. And financial markets and investor participants have cheered this monetary and fiscal response. And if you just move on to the next slide, we'll see it's not just the developed markets, but Indian equity markets, especially the Nifty, have been no different in that regard. If I just look at where we are today, Nifty is up about 35% from the pre-pandemic level. If you look back at March 2020 or March to June quarter of 2020, no would have envisaged that. And from that bottom that I look at in March, Nifty is up almost like 135%, which is by no means it's a phenomenal and staggering performance. And we are definitely among the emerging markets, being the most sought after market. The kind of FDI flows that we have seen, have all culminated into the fact that India's growth outlook today is one of the best in a long time, driven by a multitude of factors. We can pick up the steady growth in consumption, the rising employment and wages, robust exports, the acceleration in infrastructure elements by the government, the robust foreign capital. RBI's foreign reserves today stand back at $635 billion, which are again, almost at all-time highs and pre-GFC levels. That is almost going back 10, 12 years. The government initiatives in the PLI schemes, the production-linked incentives, ample liquidity and benign interest rates. So if we just, move on to the next slide, Shrey, this is very critical to me. We keep talking about, while this forum is about public markets, I just want to spend a little bit of time as to what's happened in the private markets, especially in the Indian startup ecosystem. That to me has been a significant progress over the last few years and has become a critical growth driver for India that I see in the next 5, 10, 15 years. India, for if you look at the chart on the right side, India for the first time has taken over China in the number of unicorns that happened in 2021. Now, of course, we know the kind of disruption that happened in the China tech sector, and out of which private equity flows flowed out of China, and India became a massive beneficiary. But even the kind of entrepreneurial risk appetite that's coming in, the kind of new age technologies and companies that we are raising, there is complete demand for the kind of diaspora that is moving into this space. I think it's going to be phenomenal. The story in India is just the complete opposite of what happened in China. India saw 33 unicorns added in 2021. As we have converted into 2022, January has seen that list get added. And if I just zoom out and look at it from just at the last decade at large, we can see how India is changing as well. The digital adoption that we keep talking about in forums, that we keep reading in newspapers and the media, is not just limited to the urban cities. Industry after industry is coming out and changing the perception of how they interact with consumers, how consumers are adopting digital means for doing business and companies. The new age companies are, to me, plugging the gap between the demand and supply across sectors. So the potential for these new age startups themes will play out in the Indian markets in a much bigger scope than anyone is imagining. The availability of the talent pool, the large market size, and the risk capital boards very well for the Indian startup ecosystem. Why India? Shrey, if you just kind of move on to the next slide. I've tried to summarize in a very simplistic manner. Of course, China plus one, we've been talking about it for the last 1 year. The rising domestic equity culture that is kind of, we have seen in India since the pandemic, the improving earnings that have been lackluster for the last 5-6 years, and of course the capex cycle. So if I just move on to the next slide, China plus one. Yes, India has been a significant outperformer to China, as I already mentioned that. But India lost out to the first 2 decades to this kind of scale up in manufacturing that was happening in China, right? The disruption due to COVID-19 has triggered an urgency to diversify global, China, to diversify away from the global supply chain that MNCs were dependent on from China, right? And India and Southeast Asia countries like, Bangladesh, Vietnam are massive beneficiaries to that. India, in the Indian government and the Indian private manufacturers realize this opportunity. It's come at a very opportune time to India. Government last year decreased corporate profit taxes to become very competitive. We have PLI schemes, we have tax incentives, we have other favorable government policies. So for me, this is one of the key elements that why India is, aligning a lot of multitude of factors. Shrey, if we move on to the next slide. The domestic equity culture in India is on the rise, right? You can see the amount of inflows that we are continuing to see in mutual funds, direct investments by the retail participants in India. And if I just look back the last couple of months, since October, foreign FPIs have been selling Indian equity markets in the public markets, right? Every month we have seen a negative outflow from that perspective. But on the flip side, the domestic supply the foreign supply has been very well absorbed by the domestic money demand, right? That to me, in the past, I've been trading India for almost 2 decades. Whenever foreigners were selling India, India would see a massive pullback and a sharp sell-off in the equity market. But this time around, that's not the case. That means that the financialization of savings that is moving into the equity culture is actually a real inflection point that has happened in India, and that will continue to, we had January numbers out recently. The flow of money into equity markets continues to be on an uptrend. And I think that will be on the rise for this decade and for years to come. Just move on to that. You can see how the participation of retail investors has, in the last 5 years alone, has gone from 33% to 43% already, right? And I won't be surprised if we were surpassing 50%, in the next couple of years. If you move on to the next, for me, Nifty earnings are a very compelling story for this decade. It's amazing. I keep talking about, I like to study history, and 2003, 2008 was a very golden era. We had 20 to 25% of EPS CAGR across corporate India at that point of time, which led to a very bull market in India. Nifty earnings since the GFC or the last 5 years in particular have averaged only around 6%, right, of half of nominal GDP growth. As a result, corporate profits of listed companies have contracted from 7% of GDP in the start of 2010, 2011 to an all-time low of almost sub 2% in 2020. But, that is changing dramatically in the last 2 years. And if I had to kind of summarize what happened in India during that 2015 to 2019-20 period, was that, we had a lot of bad debts in the banking sector. We had deflation going on in the commodity perspective. We had disruption from a negative aspect in some of the technologies, and defaults wrecked the earnings cycle and eroding 80% of profits. For me, the IT and pharma sector, the disruption in the telecom, with Jio coming in, with profits collapsing across a multitude of telecom companies, and the defaults that we saw in banking sector are all, we have taken the pain, in corporate India has taken the pain in the last 4-5 years. As we are emerging out of the pandemic, normalcy is coming back. There are profitabilities coming back into all these sectors. And the way I look at it, within these three sectors, 80% of Nifty profits will see a revival. And I envisage Nifty EPS to go or grow at a CAGR of 25-30%. And that also bodes well with the macro background. Shrey, if you just move to the next slide, please. Credit cycle has been in a lackluster stage in India for the last 4-5 years as well. Liquidity perspective, I think, monetary policy has been very benign. Interest rates are at all-time lows today. Our home loans in India today are at multi-decade lows. That is also seeing a revival in the real estate sector and in the kind of transaction that we are seeing. Banks' balance sheet have capital adequacy, and banks, I believe, the banks' balance sheet are stronger than ever before. So if you move on to the next slide, just elaborating that same theme, short-end rates remain very low. RBI has again kept rates just about 45 minutes back as we went live. India has kept rates on hold while there was chatter that they may reverse repo rates by 25 to 50 bips. I think they are cognizant of the fact that growth is there. Yes, inflation is a worry, but at the same time, I think policymakers are also envisioning that there could be a transitionary nature of or a reset in inflation, and we would like to look at more data points before they react. I think it's a no-brainer that Fed will raise rates. Rates are at 0%; they can only go up higher from there. But I think that's a well-marked narrative in the equity markets, and I wouldn't be worried too much just at the moment on that. Shrey, if you can just move on to the next slide, please. As I said, real estate is revival on the cards with ultra low interest rates. As you can see at the bottom of this chart, unsold inventories are decreasing, which bodes very well. We have been, as a house, bullish on real estate. I personally am very bullish on the real estate theme, and let's take a step back. For the last 10 years, the sector has been on a sideways to a downtrend. And anytime we have seen in India a sector that's been out of favor for 10 years, the revival and the upscaling of that when the inflection point happens is very fast. So I would be very bullish on most of the themes to play out, and it's a large GDP impactor from not just the first derivative but the second and third derivative as housing as a sector and the revival of that. If you move on to the next slide, as I said, for me the 2020s are very much realigning the golden era of 2000s, right? From an export point of view, from bank monetary setup, from government focus. And let's not forget that the stability of the regime from a political landscape, INR being very stable for the last 2-3 years, there's been no FX volatility. We have been able to attract a lot of foreign capital, not just in public markets, but private capital markets in terms of startup that I just spoke about. All these things aligning with the reform sectors that the reforms that are happening in different sectors are, for me, the key ingredients for the super cycle to continue in India. Shrey, if we can just move on. Again, I talked a lot about the 3 Ds that disrupted India in the last 5 to 6 years. What are the 2 Ds that are coming in transition very well in India? We talk about demography, but in the next 3 to 5 years, we are about to overtake China in terms of working age population, right? We have a very healthy disbalance towards the young and those who are working in India. That is a huge advantage that will play out, from providing human capital and resources to all the growth areas that India needs. The next element of that is the next chart. I keep talking about how the demography and the capital cycle. We already talked about this. So let's move on to the debt side, Shrey. Low debt. India has already seen the deleveraging in the last couple of years. As I talked about, our NPA cycle has seen the pain. For me, Indian private sector debt to GDP at around 70% versus China at 220%. And if you look at developed markets and most of EM, Indian debt is at a very low levels versus the rest of the world, which plays again to our advantage. And I am very, very positive on that. Moving on to the next slide, benefit of reforms. As I said, a lot have been talked about India tracking a 5 trillion GDP. But for me, what's really important is that where we are in the journey versus China. If I look at China, China was where India is today at 2006. And if you look at the China GDP chart, it just kind of, accelerated after 2006. I believe India is on the similar path. And as we trickle upwards of 5 trillion, 10 trillion, I think is going to be very, very critical in the next, 5 years. I don't think if pandemic would have happened, we would have been at, we wouldn't be talking about 5 trillion, we'd be talking about 10 trillion already in the next 3 to 5 years. So I also think the mega trends that will play out as we talk about India, right? I mean, that was a macro thematic. I just want to spend a little bit of time on the micro thematic as well. Information technology, the IT sector, IT services is a very fragmented industry globally. India has the labor advantage and the availability of the skilled talent has historically proved to be a game changer for Indian technology players. The pandemic has provided an impetus to offshoring. COVID accelerated the demand for the digital investments by enterprises globally. And I think if I were to just quote the Gartner forecast, which is probably the global predominant forecasting agency, they envisage 2021 to 2026 IT services demand to grow at about 8 to 10% year on year. And if you look at 2010 to 2020, the growth was only 4%. So we are almost talking about doubling that. So I completely believe we have a brilliant analyst in Edelweiss called Sandeep. He's been talking about the IT mega trend that will continue this decade, and I have a big supporter of that theme. I remain very bullish on AI, cloud computing, all the subsectors in IT. If you just move on to the next slide, Shrey, I remain very, very bullish. Cloud services, artificial intelligence, cybersecurity, the Internet of Things. I think there'll be a loss of massive spend by corporate India, and the Indian IT sector weights are about to increase, and the profitability is going to be for multi-decades and multi quarters. The next kind of banks, I've already talked about that. For me, the corporate NPA cycle is largely behind. Banks are entering this cycle with a very strong balance sheet, high capital adequacy. Credit growth is about to improve drastically on the back of the economic recovery. I would definitely see sectors are consolidating with larger banks gaining market share. And let's not forget, we keep talking about the digitalization of India, but for me, the juxtaposition of, the merging of banks along with fintech and technology, I think that will play a very key critical role in India's growth. There have been several new listings in fintech, that will increase the investable universe in BFSI. And that's when for me, consumer tech, this is, I think, we don't give a lot of credit to the government, but for Aadhaar is the single biggest digitization program that has been undertaken globally by any government, right? And from a personal identity perspective. And I think as the day progresses, most of the state governments are using this digitization for a variety of purposes. We are already the second largest country on the net today, right? But we are still the largest number of people that in India that are not on the net is still the largest. The first 100 million for people to have access to India took 10 years. The second 100 million people took almost 3 years, right? The third 100 million took less than a year. So the exponential scale at which the availability of resources, smartphones that is happening is phenomenal. And I think the next game changer will be, the 3G and 4G elements are already out, but 5G will create a massive impact in terms of providing availability of resources, applications, accessibility to bank accounts, the jam trinity that we keep talking about. I think that's all changing. I think, e-commerce should eventually flourish in India. We are already seeing a lot of deployment by both domestic and foreign capital in that space across the Indian diaspora. And if I were to kind of, just amalgamate and, merge tech along with consumption, India has got a big consumption theme. We are going to basically double the number of middle class households earning between 5,000 to 30,000 per capita GDP, very, very soon. And if I were to kind of talk from a macro perspective, basically, if you add 1,000 per capita and you add to our population, right, of X amount, you're talking about 1.2 trillion of purchasing power that is going to hit corporate India. That is the theme that we're talking about. These are really big mega trends. So the consumer discretionary expenditure that India is about to overtake from a very long-term macro structural story is here for years to play out. We are also going to increase the middle income population from 300 million to 600 million in the next 6-7 years. For me, that is going to be a massive change. And lastly, the new energy change that has been talked about. We had ESG theme playing out, last 3-4 years. Since the last year, we've been talking about renewable energy, not from a developed market perspective, but also from the India perspective. We have every large conglomerate, whether it is the Ambanis, the Tatas, or the Adanis, they're putting enough resources. They're talking about it. We recently had both Mukesh Ambani and Gautam Bhai talking about the fact that how much of renewable energy is going to be a structural shift in India. The amount of resources that are plowing into this sector, I think it will transform a lot of existing players across industries in autos, refineries, utilities, and I really think that is going to be a game changer in India as well. So those were the kind of mega themes. We are talking about India. I can continue talking at length. And I'm very excited to see the lineup today that Aditya and team have put up. I was given a cutoff of 11:30. We are sharp at 11:30. So I'll stop here. I'll thank Aditya and his team. And I do hope that this mega theme and the super cycle that India we are very bullish on continues. Of course, there will be volatility along the way, but that will provide opportunities to scale up on the real quality stocks and investment ideas that we think that are going to play out and provide a lot of wealth creation opportunities in India. With that, thanks Aditya. It's been a pleasure as always.